the other person I want to introduce you tonight, the very, very super duper special guest, is Dr. Chun Xia, right, of TSVC. And this is a venture capital fund that has been, let's see, founded in 2010 in Silicon Valley, and they've invested in more than 200 plus startups, and also had, one of their biggest, wins, I would say, is investing in Zoom at the institutional seed level. And Zoom at one point was a $100 billion company. So with that, I'd like to get started and maybe pass the mic over to Dr. Chun Xia to get things started.
Yeah, welcome everyone. Yeah, it's my pleasure to meet all the friends here, and thank you, Kay. Right, you're so super. So my topic is building the next unicorn. Actually, we made it a series because everyone, right, you as an entrepreneur and also investor and us, right, we want a success. Then based on our experience, right, we summarize the 3 key factors. And some quick fact about the TSVC, as a case said, right, we founded in 2010, already 11 years. So our hit is a big hit is Zoom, right? We were in the very first seed round. We're the only institutional investor. 200 startups so far, and 4 IPOs and 8 unicorns. So far, we are in the industry, we are rated as the highest unicorn from seed, the hit rate, highest hit rate. So I think why we achieve this kind of a hit rate, because we have a large team, relatively, fund is small, but the team is large. We have all the different kind of industry experts, and also all the investors, most of the investors are serial entrepreneurs. Then we invest a broad area, a lot of technology. Okay, so when we talk about the 3 factors, right, I would like to bring up the ancient wisdom from China. Okay, so everyone knows the art of a war, right? It's by Sun Tzu. In art of a war, right, it's for winning, how to win. And it says that I take some very solid and very key ideas. It's about the align to heaven's timing and identify the advantage of Earth's positioning. And the harmony of the people is a key, right? And then it says the timing and position will work. This by Sun Tzu, the art of a war. So in this sense, we say we take the ancient wisdom, right? The building the next unicorn. The 3 factors it is about the timing, positioning, and people. So this is our conclusion after we invest in 11 years for 200 startups. So that relate to the timing, relate to the market, positioning relate to your product and technology, and people, of course, is about the team. So I think a long time ago, Bill Gross from Idea Lab gave his very famous talk, right? Even in the TED. And he talked about the timing, right? He rated his 200 portfolios, and after analyze failure and the success, and he found the timing is the most important, right? And then more important than idea, the funding, or business model. So now we talk about the timing in great detail. So let's learn a few Chinese words, right? Timing in Chinese, in Sun Tzu, the art of war is a 天时. Tian is a heaven, sky. And here, what do we mean? We talk about the market, right? So it is a big market opportunity that cannot be created by any individual or any organization. That's the idea. And the Shi is a timing momentum. It is a limited time window of a big market opportunity. It is a window, right? If you miss it, it won't come back. Then let's look at some very significant timing, right? So like a 9/11, that kind of mind share change and behavior, human behavior change at an extremely massive scale and extremely high cost. So it's a disaster. And that kind of a mind share change is about security. And that moment, right, and I think all the US people, right, people in the US, they never feel we are so secure. And then we change our behavior. The next one is a pandemic, right? And also it triggered the the mind share change and the behavior change in the society, right? In people at a massive scale, and extremely high cost. It is right, the change is about remote anything. So we can accept, right? We don't feel anything odd if we do anything remote, and the virtual life, right, become a norm. Well, so the market timing is about the capturing the right opportunity. And we said, right, mind share change and behavior change at a massive scale, that is critical. Because people, right, when you deal with the market, the most difficult part is to deal with people and change the people's mind, right? It's almost impossible. Then you don't do it yourself. You just leverage. So that kind of a change is so massive. That means, right, it's too expensive. Any company, right, even you spend $1 billion, you cannot make it. And any individual, even you are so smart, you are so influential, you cannot make it, because the cost is extremely high. It's like the 9/11, especially like this pandemic, this costs $1 trillion, and millions of lives. And all of this opportunity, they have signal events, right? 9/11 is just one day. It is a signal event, and then it triggered the cyber security. And a good example is my friend, the company, they call it NetScreen. They started in 1997, right? They went public right after the 9/11, right? And at that time, you see the market is so bad, right? It's just after the dot-com bubble burst. And the other example is 2008 financial crisis, right? That is a big disaster as well. And then we see this event trigger the great startup like Airbnb in 2008, Uber in 2009, and Bitcoin, right, in 2010. And a lot of reasons, right? For the shared economy, I don't believe, right, people are willing to share. And then, because if you say I'm willing to share, I can do it any day, right? But at that time, because of the financial crisis that triggered the demand, people want to make extra money, right? And people are willing to rent a bed or rent a room to you, right? And people want to drive their car, right? And their spare time to become an Uber driver. And then Bitcoin sees, oh, this financial system is a disaster, right? We should do something differently. That is a Bitcoin. And for COVID, it's very obvious. It's about the remote anything. And then we get into the virtual life. We see the rapid growth of Zoom, and also the metaverse hype started, right? Triggered by metaverse, because all these kids stay home playing the games. Right? We are all virtual. So then what I believe is we can use a signal event to foresee the next 5 to 10 years. I think that our audience already asked, right, about the what happened yesterday, about the war, right, in Russia and the Ukraine. That is a signal event, definitely. And what is the impact for the next 5 to 10 years? That'll be extremely interesting. And we want to be very, very sensitive to that. And then the scale of that event, the impact of that event will determine, the scale of the event will determine the level of impact. The good example we already know is the COVID, right? Already create a financial bubble. And then we should look at what will happen post-bubble. That will drive us into next 10 years cycle, right? And we can predict the bull market, right, at almost finish, and we'll get into the new cycle. And that will create a lot of new opportunities. Then we use Zoom as a good example because we're early investor, right? And we should analyze what's the timing of Zoom. So we invest in July of 2011. At that time, Zoom called SASB is not the name Zoom. The signal event, first we talk about the signal event. Actually, it was year 2007, iPhone. It was iPhone. The iPhone triggered the mobility, right? It's a starting point of a smartphone. And after Apple, right? After Apple, and we see the Android, there's a lot of things happen. So after 4 years, and in 2011, it's a really, really foreseeable mega trend. It's enterprise mobility. We have K, right? As an enterprise guy, you can talk more about the enterprise.
Yes.
It's pretty much ready after 4 years. A lot of people have an iPhone. You have a computer in your pocket, right? Basically, and it is an enterprise opportunity. But however, at that time, we don't see the killer apps in the enterprise mobility. And it just happened. Zoom has the potential to be the killer app. And then today it's proven. Okay, let's move on to the second factor. The first factor was timing, right? And it's a temporal dimension, it's about time. And then let's look at the spatial dimension, spatial positioning. Timing is about heaven, right? In Chinese, it's about heaven. And this positioning is about earth, is your location. Location positioning is about the product and technology, right? So D in Chinese, so then we learn another two Chinese. D is earth and land, is a location you want to grasp. And the Li, right? You should make your location best, is a benefit to you. So it's an advantage, a competitive foothold for you. So product position, right? How do you land your product? And first, of course, you want your product fit into the right timing, market timing. And then you need to carefully position, right, inside the market. And the position is done by the product, is nothing else, right? It is, keep in mind, right? You don't want to position something else. So it's about the product. So the product position, your position determines the level of your future success. So then we can see what's wrong, right, in the position, in the very, very rough idea. You want to avoid those red ocean. You don't want to get into too crowded market. And you really, really, really want to avoid something you don't know anything about it, right? Completely unknown field for you. Okay, so then we can analyze Zoom. What's a Zoom positioning? Actually, when we invest in Zoom, Eric, the CEO, right, the founder CEO, told us, we are going to build a very, very cool video chat tool for Facebook users, right? We said, oh, this is not good, right? This company will be in trouble because first is we analyze. The first is the market is really, really crowded. At that time, because it's for consumer, it's already after iPhone, right? It's already 3 or 4 years. There's a FaceTime and Skype. Skype has a lot of apps, right, working on this direction. It is a red ocean. And then look at the team, right? The team, all these guys are enterprise guys, like a K, right? So this founder, they came from WebEx, came from Cisco, yeah. So enterprise, they don't have a DNA. They don't have a DNA for consumer product. So for them, they are entering unknown territory for them. They need to learn, but maybe it takes too long to learn. Yeah, sometimes it's really, really difficult to learn, to switch your DNA. And then after 1 year in the 2012, right? So they made one pivot. Because after 1 year, they tried, right? They finished their product, they push into the Facebook, and it's difficult for them to grow. And virtually there's no way to make money. Yeah, and then they realized, okay, they should get into the blue ocean. Their favorite spot is the enterprise. So then the because the they see the enterprise is a new market, right? Of course. And Eric, right, his team has a deep experience, a lot of experience from WebEx. They know what to do for the enterprise product. And we, upon the investment, right, in the 2011, we told them, right, so it's better if you do enterprise, we have a better chance. And actually, we don't feel why we invest, right? Because we don't feel it's odd, right? The market entrepreneurs need to learn from market, and we could be wrong. We could be wrong as well, right? So that's why we invest, because at that time we know the UC Berkeley. There's a professor. He did a research, and he summarized a lot of startups and realized the average pivot time is 1.4 times. So it's very normal. At least you want to pivot once. It's very, very normal. So this is about the positioning. Okay, and the product need a positioning. What about technology? The technology position actually is to build the entry barrier, right? And to secure your position, to secure your foothold. And then you need your technology defensibility. Is a very, very deep technology moat, right? Usually this kind of defensibility or entry barrier, you need in our experience, you need to have like at least 10 years technology accumulation, long time accumulation, and to build this kind of entry barrier. And also we saw a lot of technology founder made a mistake, right? And because he said we have a very, very disruptive technology. It's really, indeed, it is a very, very cool position. Of course, position is very, very defensible. Nobody else can compete. But however, timing is wrong. Then let's look at it. What's wrong? I made one example, right? I took an example everyone knows about a tablet computer. In the early days, I consider maybe the earliest tablet computer in the market was Jerry Kaplan's Go, right? Yeah, Jerry Kaplan. He started a startup in late 80s. And then he created the very first commercial tablet computer is just like iPhone, right? Upper in here, right? Like iPhone in 1993. And at the same time, Apple had a Newton. This is Apple Newton. And we all know all those products failed because of the wrong timing. Yeah, this was the right timing, iPad, right? 2010. But I would like to ask the audience, we know it's the right timing because after many years, it was a successful product. And what was a signal event?
What was the signal event?
Right. For the iPad, right? Why we need to analyze why iPad was successful, right? What the trigger? Yeah, why market is ready for the iPad, and why in 1993, right? It's a dirty expensive, right? For those tablet computer, Apple Newton cannot sell. Why after 7 years, right? The iPad can sell so well. So that's a question. Yeah, we want to know. I think every founder, right, and also investor, we want to know. And then let's get back to the Zoom's case, right, example. At that time, I said Zoom was not, at the very beginning, they called a SASB, it was not known. And their position about the technology position. So Eric, when we met Eric was very exciting told us, right, look at my technology is the best because I built my proprietary video codec. And I said, oh, you're crazy, right? Why don't you just use those standard video codec, right? He said, oh, I have a reason. I have a lot of reason because we were working in the WebEx. We know in the video conferencing, we have a lot of challenge, especially he already had the right timing is about the mobile, right? Mobility. And he told us, right? So if you want to make your codec work well for the mobile device, At that time, it was 11 years ago, 2011, right? So some people already use a 3G network. It's not so fast. And what he said, if you want to deliver HD video using 3G network, right, you need to have some special technology. And also, a lot of people still stay on the 2G network at that time, but you don't want to drop the connection. Yeah. So really, even today, I really appreciate Zoom's technology because I know they have their special codec. I remember when I was in China, I was in high-speed rail, right? It's really, really fast. Even I was getting to the tunnel across a hill, right? Getting the tunnel, my connection didn't drop, right? It is a great technology. So they have this technology advantage. Even so, they switch the pivot from a consumer-oriented product to business, right, to enterprise positioning. So they hold this advantage. So this is a benefit from their technology positioning. Okay, this is about the Zoom technology. All right, so we just talked about the first factor. It was the timing. Second factor about the position. Then let's look at the unicorn factor 3. It is a people, right? And another 2 Chinese word, 人, yeah, the 人 Chinese word character 人 is a people, human. Then we talk about the team, right, in the startup. 和 means a harmony, get along, right? So that basically is the end result you can envision, the team can envision, can execute, and finally you can win because you can get along with things. And I will explain why. So the team is the ultimate winning factor, right? And the first is the team, the people need to get along with the timing with heaven. You need to get along with heaven. You need to get along with earth, right? And then you need to figure out what is the best timing and what is the best positioning. So this is all figured out by people, by your team, right? So this is a very critical. So only the right team can figure out the right timing and the right positioning. So then I will say, right, the people should be in harmony with the heaven and the earth. So this is a Chinese ancient wisdom, right? There's more than 2,000 years ago. Then you need to align with the best timing, identify the best positioning. I keep it again because it's so important. That means you can definitely, as a founder, I think every founder has this strong mindset, right? We are willing to change the world, but you don't want to change the heaven and earth. Yeah, instead of changing the heaven and earth, you just go ahead and adapt. Let's look at the Zoom, right? So Zoom did this pivoting. In Sotheby's first year, right? Eric, he told us, right, he just want to build a very perfect product because he's an engineer, right? He was an engineer and a very strong engineer mentality. I think like a lot of audience here, technical people. So they didn't take the MVP approach at that time. And they just spent the first year and very, very deep, right? Getting very deep in the technology. They built their codec, a lot of technology stack. So they did it that way. And we know, right, because they saw the market, oh, it's not difficult. If we build a great technology, right? If we build it, they will come. But the reality is not true, right? Their initial sale, right, is not quite successful. And then about that stage, about 1 year, they are in the stage to raise an A round, right? They really had a hard time. But good thing is Eric, he made a big change, just reposition the company from consumer product to enterprise product. And then he decided they want to get into mobile enterprise video conferencing. And then they renamed the company into the Zoom. So that was the story. So that means, so the Eric, right, the team can figure out the right timing. Timing is about mobile, no problem. And then they figure out what is the best position for them. It's not a consumer, it is an enterprise. So yeah, we see if we want to build a winning team, right? The winning team is a lot of factors. And for example, we can talk more about this, right? For example, you really want to have a complementary skill set, and you should have a very strong execution ability. The team has a great vision for the future, right? Have a deep insight for in the industry, and know your positioning and know your timing. And of course, the team, right? As a people, you want to be a good people, right? Integrity is very important. You can win a lot of friends and win a lot of trust. And the team must be the open-minded and ability to have a strong ability to learn. And we are investors, right? If we're getting old, right? Even today, right? Every day we want to learn new stuff. Otherwise, I think we'll be kicked out. So yeah, we want to see the founding team is really coachable, because if you are coachable, right, you can leverage a lot of resources from different advisory. And finally, the team must be very sensitive and also influential, to make yourself very, very extremely influential to your customer, your investor, and employees. So this is actually about the harmony from people to people, among people, right? You need to build this harmony relationship. So then Eric, right? Eric is Zoom CEO, back to Zoom's example. Zoom CEO, Eric, he was really, really good in this, right? About the 人和, about the team and people's harmony to heaven, harmony to earth, harmony to people. So he has been voted as a best CTO by Forbes. Yeah, so I think this is a right time for me to conclude this talk, right? So what I talk about is building the next unicorn based on our 200 startups investment over 11 years. We learned a lot of lessons, and we figure out there's 3 key factors: timing relevant to market, positioning relevant to product and your technology, and finally is people, is the team. And then what the matter is actually I put a roughly scale, right? The timing is important, but positioning is even more important. And in the end, the people make everything happen. So people is the most important. So let's review what we learned. We can learn from the art of war, right? The 2000 years ago, the ancient wisdom. So it's about aligned to heaven's timing. That means you understand when to attack if you want to win your war, or win your battle. And then you want to identify the advantage of Earth positioning. So that's about product position or technology positioning. You understand where you to attack. And then you want to have a harmony, right? The harmony of people is a key. And then the timing and the positioning will work. So this is about the harmony, is about people to heaven, people to timing, understand what is best timing, people to earth, you understand what is the best positioning, and also people to people. So that's the content of my talk. And this is building the next unicorn is a event series, like Kay said, right? We host every month. So next month we have some new topic. In the upcoming event, we are going to cover the unicorn in specific area. And when we talk about unicorn, is a unicorn from a starting point. You start, right? You want, it's not about the A round or C round, right? C round is already some company already become a unicorn. We talk about the before the seed, when you get started, how to position yourself, right? And you have a potential, great potential to become a unicorn. And in the different industry, is we analyze and we see the different approach. For example, AI, metaverse, semiconductor, health tech, fintech, a lot of interesting topics. And also we want to analyze, we want to discuss the 3 factors in greater details. For example, in March, we're going to talk about, because we already foresee so many signal events, the market will going down, right? So if the market is going down, and what will be the unicorn opportunities in the next 3 to 5 years? And then how to leverage the design thinking, for example, right? How to use a systematic approach to position your product, to find the best location, best spot for your startup, and how to build a unicorn team for sure, right? And there's a lot of interesting topic we want to discuss and we want to share with a lot of friends.
Dr.
Okay,
Chun Xia.
then yeah, so this is our website, and follow us on LinkedIn, and I'll give back to Kay. Thank you.
Dr. Chun Xia, I mean, that was a really good discussion. Like, at least, I mean, I don't know if you could hear this, but I'm clapping over here. The part that really, just some of my thoughts, and I do have some questions here, and everyone in the crowd, feel free to ask a question as well. My favorite slide, this is my comments. My favorite slide was that, I think it was the second or third to last slide, where you basically talk about, you revisit, summarize the three key things, right? Which is basically the timing. But the timing is not as important as the positioning. And then the positioning is not as important as the people. So in my, I guess you could say, grassroots to getting into venture capital myself, ultimately in the end, I am vetting a lot of technology, but I truly believe the same. It comes down to the people, like trusting that the people could execute their integrity and all that. This slide right here, this is a incredibly intellectual slide for myself, because we talk about the timing, right? The markets have its ebbs and flows, its rhythm, and you might time it too early, therefore you won't get traction, right? So you got to really understand the time frame of the world, where we currently are in the world, the market. And then once you understand the frame or the time frame of the world, you think about how do you want to position yourself from a technology perspective. Okay, if the trigger event is the iPhone, everyone's going to be consuming more, I guess, FaceTime at the consumer level, but I will position at the enterprise level, like Zoom. So that story was really impressive. And then the last part, I love how the bar is the biggest. It's all about the people, right? And then the cherry on top is the art of war quote over here, right? Align to the heavens, which is timing. Identify the advantage of Earth's positioning, and in the harmony of people is the key. Then timing and positioning will work. Man, that's an elegant way to put it. I like it. That's one comment. So I really admire the structure of thinking that you have here. The other part that you taught me that was really critical is trigger events. Trigger events or signal events, right? I think about that all the time when I'm evaluating publicly traded companies, where an earnings could be like a trigger event, or I don't know, deregulation or regulation of an industry is a trigger event, or newly fresh funded venture capital at large scale is a trigger event. I think if people pay attention to more of trigger events in the world, they could really effectively increase their precision of forecasts, right? So if we think about today, especially in today, modern times, what are some trigger events? COVID, right? The global pandemic, and most recently this week, a big, government or a big nation flexing war, right? So this is definitely a lot of like economic ripples or trigger events that we need to pay attention to. So your presentation enabled me to better pay attention to that. And then the last comment I have, that was, the part that was really interesting to me as well, was I guess the statistical analysis that I think you mentioned, professor at Berkeley or Stanford, is that startups actually pivot 1.4 times on average. I'm seeing that firsthand with some of the startups I've invested into. In this case, the startup pivot, like, it's probably going on a third time, but that's truly fascinating to me, because it also ties back to the individual level, right? So that's UC Berkeley research. At the individual level, I think on the consumer individual level, we tend to shy away, be too shy to pivot. But the more I study entities, like organized entities like corporations or enterprises, they're actually very open to pivoting. They pivot all the time, and there's no shame in that. So I think one way to really develop you as an individual is to have no shame and don't be shy to pivot in this lifetime. That's some valuable lessons or takeaways that I got from the presentation. Anyways, I like to bring it back to Q&A and bring it back to the audience, because I know you guys, I hope you guys enjoyed the presentation, right? Another perspective view of a very seasoned venture capitalist in Silicon Valley. For myself, I'm relatively new, so to me, this is a treat. I do see a lot of comments. I'm going to run through the comments. I got some questions here as well, but guys, throw me the questions. Let's engage for maybe the next 30 minutes, and we'll call it a night. We won't keep you guys too late. So let's see. Takuna says, thanks for the presentation. I followed you on LinkedIn. We appreciate mentorship for growth and investment opportunities. I believe my idea can be a unicorn. I think tsvcap.com has like a place where you could submit your pitch deck and stuff like that. I would say reach out there. Jim says, I meant to say consumer Wi-Fi. Sorry, 400,000 in 2008. Okay. Zifty says, Dr. Xia, appreciate how you tied together the past and the future, tech unicorn, using Tao's philosophy and Sun Tzu's wisdom. Do you have any suggestions about startups that target green energy tech like fuel cells and batteries for the coming years? Any opinion on that market thesis?
Yeah, so if we use this the art of war, right? This ancient wisdom to analyze, we can see the timing. I think fuel cell is a timing a little bit early, but we know it will happen, right? It will happen. So last year we invested one hydrogen related startup. So there is a material. So we believe that it will happen. And then the positioning, because the market, even timing is a little bit early, still we see it's getting crowded. There's a lot of company getting to, even if not just a startup, even the big company, right, getting to that space. Then you want to be carefully, right, to position yourself to see finding your sweet spot. And then team, right, of course, we want to see the team have a really strong domain expertise. Usually, quite often, I think in this field, we will see the cross-discipline team has a really advantage. Some people understand the energy industry. Some people may understand some technology, either some application, vertical application. For example, I think we just met the hydrogen energy fuel cell related company. They want to build the next generation airplane. So that's a very interesting, right? So it's a cross-discipline.
Doris also has a comment here on, going over the summary of the three things. She wanted to add a fourth thing, which is imagination. Free floating thoughts between philosophy and physics. Yes, I thoroughly enjoyed the presentation from Doris.
Thank you.
This is from Yu Hong Wu. Dr. Xia, thank you so much for this talk, and it is very informative and helpful for new founders like us. Question, does this monthly event series indicate that TSVC recently changed the application condition that founders should show strong tie to Tsinghua University? I don't know about that one.
Tsinghua University. Yeah. So for us, I think we're actually talk a little bit about the history of the TSVC. So we didn't start from a fund. We started from a volunteers work back to 2010. We were volunteers for Tsinghua University alumni, and we have at that time we have a lot of alumni friends, right, and to build a startup at that time. And after several months, we see people come and go, and they have a lot of issues. They struggle, and also they have a hard time to raise funds. And we see the strong demand. Why not we start a fund? So that was TSVC. At the very beginning, we called it T Angel Fund. That was history. So that's why we are back to community. We feel we have that obligation, right? Somebody called us, right? We have that obligation. We need to give back to community.
Interesting. That's very interesting on the history part. Question from Jim over here. If the product is simple enough, can a sole founder be superior to a team?
Could be, but actually, well, in my experience, even we say the product is simple, it's just a service. And in the end, you see that it is a business, right? It's not just a product. And the business, every business is not that simple. And it's better to have a complementary team. But if you're super, right, the super, and you know everything, of course you can accomplish everything by one person. But in reality, it's very difficult, right? We better see the complementary team.
Some questions over here. I'm gonna flip it around over here. So haven't been in Silicon Valley for a few years due to the pandemic. What is going on in Silicon Valley? Maybe not that one. I could give you an update on that. But what are signs? What are the signs in an early stage indicate the future of a unicorn at the very early stage? I'm curious to know that one.
Well, it's I think what for us is we our formula, because we already we did this for 11 years, right? We every day we try to hunt the next unicorn, and this is our formula. We can tell you, we just evaluate, right, whether or not you have a good sense in your timing, right, and it's not too early or too late, and do you have a good positioning? That's our formula. And also we use all the measure to figure out what's your team, right? Each conversation count, right? Even each email counts, right? We want to understand what the team is about.
Oh, yeah. I love that. Steve says, looking backwards, trigger events may not be obvious. How do you define a trigger event in the moment? What are the criteria for a trigger event? How do you differentiate a trigger event in the moment from the noise? Trigger events are easier to spot looking backwards. How do you spot them in present time?
Yeah, because I think as an entrepreneur, even for the investor, our job is not a fortune teller, right? We don't make money. We don't live in that way. So it's okay. So once we see some big impact event, so I mean the event is a big impact, usually it's a disaster. In my view, it's not a good thing, right? Usually it's all the disaster like pandemic, 9/11, right? Financial crisis, 2008, or the war, right? That's just a ongoing war. Those are disaster. And those events have a big impact, then we need to pay attention. Usually in my past, I thought I'm just an engineer, right? I don't care about that. But however, it's a macro, right? All the whole world, the globe is connected. So all this thing connected is some people call it the butterfly effect, right? But just like the war happened yesterday, it's not a butterfly anymore, right? It'll have a big impact to the economy. And once the economy, if we see the financial market going down, right, and everything will be impacted.
Interesting.
Yeah.
Another question here is, what other unicorn companies have you funded?
Yes, for example, Qatar. Qatar is, I think a lot of startups use Qatar if you say you get into the A round, and that is good online tool to help you manage the equity. Another example is Ginkgo Bios. Ginkgo Bios, they are the number one in the synthetic biology. So in there, I think we like their marketing pitch a lot. They said we are the Apple Store in the biology. So this is their tagline.
That's fascinating.
Firstly, yeah.
Does TSVC invest marketplace startup which requires large efforts of building up seller and buyer community? It's like the more B2C side or marketplace side?
Yeah, I think we have that kind of investment. I need to refresh my memory, but anyway, when we look at those kind of a marketplace, we are very cautious, and we will see, because we want to analyze whether or not you have to grow. Your growth depend on the burn a lot of capital. So if you have to burn a lot of money, right, it's a very difficult. And for us, we are small fund, right? We want to be in the angel round, in the seed round. So we stay away. There's a big money burning startup.
This one's from Kunal. Dr. Xia, thanks so much for your time and insights. These are very valuable, and it's not easy to put a conversation like this together either. Could you share yours in TSVC's perspective on the metaverse, creator economy, and if Web3 and decentralization are poised to change the game played by TikToks and YouTubes of the world?
Yeah, so I'm a strong believer inside our fund, right? I'm a big champion to all of this direction, the metaverse, Web3, and all the crypto application, right? And inject into this future direction. It's a big future direction. However, it's just a direction. It's a very vague. As vague as when I saw the internet back in 1995. right? And when I was at the UIUC, I was a PhD student. I'm the very first group of user of the web browser. That was 1993. I think there's less than 50 people using web at that time. There's only 3 websites in the whole world. But at that time, it's too early to become a signal event, right? Yeah. But then you see, we want to capture in this, to identify the concrete signal event in metaverse in Web3. Otherwise, it's just a concept. It's just a hype.
Right.
Yeah.
Would TSVC invest in SaaS startups outside of the US, like Australia?
I think we have a few. Usually we prefer the US company, Delaware Incorporated, like that, right? Yeah. But Australia have a lot of great SaaS company.
Let's see. Do you value startups that grow sustainability and are environment friendly any different today with society dealing with the issues like climate change?
Yes. We are very cautious and pay a lot of attention in ESG space. And we see the ESG instead of just a social impact, right? It's also great business because all the government, right, and all the I mean the mind share. You look at the people's mind share, especially Gen Z, the young generation, right? Very, very strong ESG savvy. So it will be the future market.
This one's a comment from Quan Ping. I am an engineer, have good tech, and founded a startup in the Bay Area. Can you please advise as to fundraising? Is there any limitations that US governments put on investments from China?
Well, so if you want to stay away from any sensitive technology that require the export license, so that's quite straightforward. There's a lot of regulation here.
And any advice further? Any advice can you give on fundraising?
Fundraising, and I think you need to talk to the fund, right? So if your US company talk to US fund like us, right? We are all we don't have any issue with the CFIUS, right? Those regulation, because the fund is a pure US fund. Or so if you decided this company is in China, right? Just go ahead with the pure RMB, right, fund. Talk to the fund in China. Don't try to mix. That'll create a disaster.
This is a really good question that I saw in the WeChat group. What are the top differences in the ecosystem, VCs and startups today, between today and a decade ago? How has it changed from what you've seen? That's super insightful for me. So I'm curious to know.
Yeah. The big change is, of course, is timing, right? So it's very obvious, it's timing. So today is a timing is I think is almost at the peak. Because we are not a fortune teller. I cannot say, oh, you'll go ahead and just go ahead and sell all your stock tomorrow, because today is a peak, right? I won't want to say that. But anyway, we are in the financial bubble right now. And 10 years ago, when the fund just get started, it's just aftermath of a financial crisis in 2008. The market was really, really cool. Yeah, it's a low for us. I think it's always is a good strategy, because for the early stage investor like us, the seed stage investor, and also as an entrepreneur, you want to enter the market at low point and exit. Go to IPO at high point. We already have 4 IPOs, right? There's a really, really good performance. Months ago, right? And we see is going down. They're going down every day. Yeah, that's the market.
Here's a question. If you could start all over back in 2010, what would you do differently today?
Sure. Yeah. I think differently is say if we can just time travel back to that time, and we should be loaded with our experience, the lesson we learned, with all these 3 factors. Because at the very beginning, we just roughly know, oh, it's a market, it's a product, and it's a team, right? Those are important, but we haven't get any better picture about the relationship, and we made a lot of mistake.
Awesome. Do you invest in consumer biotech startups or just high tech? Sounds like you do. That was one
Yeah, we
question.
do. Yeah.
Let's see, another one. I live in San Francisco. We need to finalize a couple of details on my startup real estate industry. Could you guys help about that? Thanks. Best Daniel. Lots of requests, but I would say I would push you guys over to the website, tsvcap.com. Because of course, I'm pretty sure, Dr. Chun Xia gets a lot of business, and it's going to take some time. So respectfully go through that channel. Let's see, last question maybe. Unless you guys have many more questions, we could take this any way you want. When should a founder start to consider working with VCs?
Yeah, so I think this is a really interesting, good question. Of course, I think in industry, there's a certain criteria, right? When we see the startup is ready to raise fund. And in the different sector, the requirement will be kind of a little bit different. So for example, say if you're working on some application and without a lot of strong capital spending to develop the technology, and we want to see you have some prototype, right? You can show us something, and even better, right? You can have some initial customer to test it. So if you work on the to be business, right? You have business customer, you align several potential customer. Or if you want to face your business is about the consumer, lot of a Chinese founder, right? They want to build the cross-border e-commerce. Then what do we see? You got to have your some consumer customer. You need to create your community, and we want to see some certain traction number. Even you have some revenue, because that entry barrier is too low, right? You need to show your entry, you need to show your traction. But on the other hand, say last year, we I think 1 year ago, we invested to a semiconductor chip company. Of course, right, for the chip company, they are not able, when they raise fund, they are not able to show us a chip because they need to spend $5 million, right, to build a chip. So that's why they raise fund. So then what we look at is a team. Yeah. So what they have done, if they tape out, they tape out, if all this team add together, they tape out 10 to 30 times or even 100 times. So this team is really, really experienced. But however, even in that case, right, still those chip company, they show us a prototype, a very rough prototype in FPGA, right? Is written by software. So that's a way. Yeah.
I see. 2 questions here. When you make an investment, do you structure some milestone accomplishments? Like, how do you measure progress?
Yeah, I think progress is there's no very hard metrics, right? It's also aligned to the market. If a market grow very fast, you have to be fast pace, right? If a market has a lot of competition, slow down, and you need to maybe you need to find a different way. And sometimes the milestone will think, oh, so we will see the next repositioning, but it may not be the big pivot, right? The big repositioning, but however, you want to fine tune the product to reflect the market change. Yeah.
Okay, this one looks like it's going to be the last question. So if you guys have any other questions, feel free to bring them in, or if not, I'm going to close out after this one. So last question, I guess, maybe. How can you find good mentors and advisors?
Yeah, I think it's a community, right? You definitely rely on community, right? Like here, Dr. Wu and Kate build a very good community. And also we run the Chinese version. So if you're a Chinese speaker, and it just join a lot of a local community. So that's a way to connect with the investors, with the seasoned entrepreneurs, and they could be the advisor and the mentor. And also very possibly you can find your co-founder.
Oh, one more question just came in. If there are competing startups with a first mover advantage of 6 to 8 months, does it put a startup at a disadvantage from investment point of view?
Could you repeat again?
Oh, yeah. So if there are competing startups with a first mover advantage that went first, like 6 to 8 months, does it put the next startup at a disadvantage from an investment perspective?
I think in my talk I already answered the question. Is about the positioning. So if you're competing exactly on the same spot, right, of course the first mover have an advantage. They already occupy that spot, right? It's just like a war. So
It
one
is.
army already troop already there, right? It's difficult. You take you get them away. But however, if you land another different area, right? I think in the for example in metaverse and Web3, this is a totally new territory. This new territory. There's no human there, right? There's a lot of you just go ahead and claim your territory.
Okay. Well, everyone, as Dr. Chun Xia has mentioned, everything is at the end of the day, it comes down to the people, right? The people is one of the strongest base of everything. So I'd like to thank everyone tonight. I'd like to thank everyone that came in. I'd like to thank Charlene, Dr. Yang Wu, Yi Yao, Jian, and Cindy Zhang. So that's like the whole team on the back end. You might not see them here today, but they really put together and helped all of us. So again, thanks everyone for tonight. Thank you so much for your support, and hoping to maybe do this once a month. So come on out next time. Thank you, thank you, thank you, thank you, everyone. Uh, if you want to make any last comments, feel free as well. But we are good to go. Everyone says thank you, thank you. Is it possible to check out the meeting? I don't know if there's a recording, but that's up to you guys and how you want to put
Yeah,
that
we
out
do.
after. Okay.
We do have a recording, and we'll create a video. We can put that on YouTube.
Okay.
Yeah.
Lots of thank yous over here. So thank you, thank
Thank
you,
you.
thank
Thank
you.
you.
Appreciate the time, everyone. Yep. Thank you so much, everyone. Thanks for coming out. Lots in the final questions. You could follow up. Where to find the video, what channel, tsvcap.com, or you could reach out to me. I'll figure it out as well.
Yeah.
Okay, guys. Everyone have a really good night. Thank you so much for the genuine, nice engagement tonight. Looking forward to the next one. Let's go from there.
Thank you.
Welcome, welcome. Okay, guys. I'm gonna power off. So have a good night.
Yeah. Good night, everyone.
Have a good night.